Yesterday, the euro reversed course to nudge back into the red, thus pairing Monday's gains. And this was due to weak statistics on business activity in Germany and other countries in the bloc. Besides, the Eurozone manufacturing and services PMIs were revised down, indicating further contraction and deepening economic problems. Sluggish growth rates may force the European Central Bank to stop tightening monetary policy at the upcoming meeting set up for tomorrow. Likewise, the British pound erased early gains, coming under pressure from downbeat data on factory and services activity in the UK. The PMIs slipped further into contraction territory. The risky currencies were also weighed down by similar statistics from the US. The indices tracking the manufacturing and services sectors remained above the 50 mark, indicating growth. Strong economic data could prompt the US Federal Reserve to deliver a final interest rate increase in November or December. As for today's macroeconomic calendar, it features a batch of statistics from Germany, including the IFO Institute's business climate, current conditions, and expectations indices. If data disappoints the market, the euro will come under more downward pressure. The focus of market participants will be on U.S. new home sales and speeches by central bank officials such as ECB President Christine Lagarde and Fed Chairman Jerome Powell. However, they are unlikely to provide precise estimates of further monetary policy conditions. After all, the Fed is currently in wait-and-see mode, while the next meeting of the ECB is scheduled for tomorrow. Thus, trading activity is expected to increase following the release of U.S. housing market data. Upbeat statistics could drive the greenback further up. And now let's move on to technical analysis. The euro has come back to the level it started the week. A rise followed by a false breakout at 1.0616 will create a strong sell signal, thus bringing the euro down to 1.0586. If the price fixes below this level and tests it from the bottom up, the euro will most likely dip to 1.0558 and 1.0531. At these marks, I recommend going long on a rebound, counting on an intraday correction of 20-25 pips. If bulls regain control of 1.0586, its false breakout will enable the European currency to extend its bullish correction to 1.0616. If the price consolidates above this level amid gloomy data on US new home sales, the euro will have a chance of climbing to 1.0641 and probably 1.0667. At these levels, it would be a wise decision to go short on a rebound to catch an intraday correction of 20-35 pips. Short positions at 1.0616 can be considered only amid a false breakout. Speaking of the British pound, the situation is the same. A false breakout at 1.2188 will create a sell signal, dragging the price down to 1.2154. If the price breaks through this level and fixes below it, the pound sterling is expected to slide further to 1.2122 and 1.2090. At the level of 1.2090, traders are recommended to go long on a rebound in the hope of an intraday correction of 25-30 pips. Going long at 1.2122 will be relevant only amid a false breakout. In a bull case scenario, if the price forms a false breakout at 1.2154, the volume of long positions will increase. Thus, the British currency will most likely rise above 1.2188. Its top-down test, coupled with downbeat statistics from the US, will make it possible to go long, driving the price up to 1.2219. At this mark, traders may go short on a rebound to catch an intraday correction of 25-30 pips.